Welcome back to another episode of Around the Markets, and we're here with Mr. Peter McGuire from XM.com. Peter, welcome.
Good morning, Will.
Pete, another big week in trading. We've got a whole lot coming up. I mean, if we look around very quickly, we've got the dollar stabilising, stocks recovering, a busy week ahead. Wall Street's powering high, oil's taken a hit, soft Chinese PMIs, and hey, it's a non-farm payroll week.
Yes, it absolutely is. And they're saying that we might hit a 926,000 handle, Will, as far as numbers for Friday. So take that on board. It's a very strong recovery. If you strip out the 3 million people that have retired over the last 12 to 18 months with COVID hanging over their shoulder in the States, then the true number of people looking for work could be as little as 4 million. And with a 926,000 securing a job from middle of June to middle of July, that is a relatively strong comeback.
So it's a big comeback. I've got a chart up here that's talking about the headline on this chart actually is clearly on a path to a strong labour recovery. I mean, is that your sense?
I think so, Will. I mean, neither you nor I have been to the States in the last, I haven't been there for a couple of years, but the reality of the matter is with a lockdown, it's hard for us to gauge what's happening on Main Street over there. We hear the talk on the TVs, we hear what Wall Street's doing. I do talk to people that live across the States, and there seems to be a fairly much a strong economic recovery, certainly a lot stronger this year or today versus the 3rd of August last year. And the sense of that is built into a confidence factor, very strong recovery as far as job growth and economic horsepower coming out of the equity market. So all of those components, you would have to say, ring a large bell of confidence.
They certainly do. And it's interesting when you think about these numbers, So I think from what we're saying here, the US economy it's missing about 6.5 million jobs for full recovery, but almost 3 million people are sort of retiring because they've hit that kind of age gap anyway, right? So I sense that there's a little bit of a balance, a true up happening.
Yes, exactly. I mean, they're probably, you're a little bit older than the people retiring, Will, but that gives you some sort of an idea as far as, people say, well, they've had a lifetime of work and they're at a point in time that they're saying, well, I'm moving to a cheaper part of the States or going to enjoy my pension or enjoy life a little bit. And I think that's what's happened with the COVID mindset. People are taking for the people that are engaged with realizing the frailties of life, they're probably taking on board a more holistic approach to their longevity, Will.
Hey, Pete, so let's talk about global markets a little bit. There's a sense that there's some big activity, some big M&A happening, and so there's a frenzy, there's a big frothing of transactional noise. As we think about different acquisitions going through, I reference Square and Afterpay as this week's headline act. Global markets, overdrive, central bank meetings, the data coming out this week. All of this drives back into this employment number. Now, can it get back up to full-time employment? Or are we still saying that if the US jobs market is overflowing with jobs, and now we're looking at this chart that shows a V-shaped recovery to some extent, yes, which talks to that point about those the retirees heading back, the world looking a bit better. What does that say? I mean, does that say that that the Delta strain is not impacting the US markets at the moment?
You'd have to say that, and what I read as far as its toxicity or whether it's the potency is far less dangerous than what they're saying COVID-19 was, or the original. So there's the first part. That's what I've read. It's about 10% as far as the longevity of any virus seems to dissipate over the lifespan of it. It doesn't get stronger, it gets weaker. So there's the first part. The second part is, yes, the V-shaped recovery and jobs, and you're seeing that with that chart. Third, of course, is the inflation story, and that'll start to bite very, very shortly, if not biting now, which in turn will be a war for talent, wage growth, and all of those components. So how that plays into till the end of the year is going to be quite fascinating in itself, Will.
on the screen at the moment is the Delta Blues hit the Aussie. So we're sort of talking about extensions of lockdowns locally. I mean, Australia's playing catch up. Right? We weren't locked down that hard last year in comparison, unless you lived in Melbourne. The rest of the world really learned how to operate through. We certainly New South Wales and some of the other states in Australia are now coming to terms with what this all means. So are these lockdown blues hitting the Aussie? Is that what's driving it down? Or is it? Are we seeing headwinds from other areas?
I think the US dollar strength has been the first part. It was only back till February of this year, and I think you and I were talking about it. Are we going to see an 80 handle for the Aussie dollar? Then it capitulated from that mid-February or late February number all the way down. And then it was like, is it going to be 70? All in a matter of months. It hit around about 70, just over 72.8, 72.9, I think was the low. It's bounced from that, seems to be on an upward trend at the moment. That US dollar is coming off. And that just demonstrates, Will, if you look at, we are looking at that chart from the start of November to the start of August, which we are now. Have a look at the volatility of that Aussie dollar. That's in the gold line or the yellow line. You could trade that and just be like sitting here going, well, how good is trading? Just trade the Aussie dollar and put it all away. The upward momentum coming out of there, and if you looked at your charts, so from November 1, where that starts, you would only have to, you could be a blind, you could be a person. No, I shouldn't say that. I didn't mean it in that regard, but it's so evident, Will. It's just incredibly.
To summarise your position, Pete, to put words in your own mouth, you can take the data, the evidence is in front of you, and you can act accordingly. And on a daily basis over the last 12 months, you'd basically be arguing that you could trade this position every day. If you watched nothing else in the market, on this chart right now, looking at Aussie 10-year bond yields and the Aussie versus the US dollar, you could be having an absolutely monster, a ripper of a trading time.
Absolutely. And, and that's, what are we, August, September, October? That's a 9-month trading opportunity. Just incredible, Will. Incredible.
Yeah. Look, I haven't got a chart on this, but we are in earnings season. There is plenty of happening certainly in markets which are keeping people interested in certainly in trading equities. Oil prices not looking so great though.
No, they've come under a little bit of pressure, and it was a downward push, but it seems to be still around that early $70 handle. So again, there are other markets that they're trading. It's had a very volatile time over the last couple of months. Big pushes up, big sell-offs, again pushes up, again sell-offs. Another market that's just been incredible has been the crude oil market over that period of time. So there's another great opportunity, trading global energy, just straight off West Texas Intermediate or Brent crude, ratcheted up from those $30 and $40 handles all the way through to nearly 80. So again, monstrous moves and monstrous opportunities.
Pete, we're talking inflation a lot lately, where the world's sitting there waiting for the movements. UK chart here on screen suggests that real wage growth is accelerating. Views on that, thoughts on that, timing?
Well, when you're looking there, I look at those red bars, that bar from at the bottom, and real wage growth yearly. Well, that tells the story. There you are. It's just been boom. You've got inflation really starting to edge up quickly in the UK. You're heading towards that 2% or over that 2% magic number. It's probably 2.25. So whilst it was languishing in 2020, it's off to the races now. Wage growth, of course, and the storyline as far as the recovery phase of the UK economy.
Yeah, no, it's a big thing. I think as we look, the UK is making big effort to reposition itself and restate itself in many ways post its Brexit situation that it's been managing itself through. So we hope that they've managed to stage a couple of big events. Wimbledon was a good thing. Ash Barty getting up and winning it for Australia over there was a great thing. But hey, look, like the rest of the world, they are impacted by the global pandemic. And as we see on this chart, inflation could be seriously on the cards.
Yeah, I think so. And that storyline rolls across to Eurozone, rolls across, of course, to the US and what we're feeling in Australia. So, yeah, it seems to be a global point, higher costs and how that all plays out.
Pete, one of the subjects a lot of our listeners, a lot of our viewers, a lot of our watchers really kind of get into is gold. And we've got the daily chart here up on screen. And, and look, worth noting, I think there's quite a few guys over in the West in Kalgoorlie right now talking amongst their peers at the diggers and dealers. And so I've no doubt that the super pits being a story that'll be rolled out again and canvassed amongst the rock stars, pardon the pun. But gold, Pete, talk to me about this chart. Why is gold always a good move?
Well, it's a 9-month chart. I'm seeing that it goes to from 1st of December to really the 1st of August. So over that 9-month window, Will, we've seen a low. I'm just looking here, 1678 was the low. You've had a high there of 1961. So again, you could have just traded the gold market for that year and you'd be rubbing your hands with glee on the big, push up as far as price that we saw December, January, and then the big sell-off probably the midpoint of February. Then it just capitulated, then the reversal all the way back up to 1800. And I try to see what that chart price is there. Might have been 1900. Well, then it's back down.
Closing up at 1834, I think, mate.
So it's just had such a wonderful, again, opportunity. And many traders all over the world have really embraced that US dollar gold story. And you could, again, another market, you could just say, I'm only going to trade gold. And it hasn't disappointed. You're just looking at, your technical analysis, look at your fundamentals, study your market. And when it capitulates, it normally sells off violently. Your chart should set you up for that to identify when to be in and when to be out, or when to be long and when to be short. And it's as simple as you could be long a position. In other words, the position's going up. You sell double the amount to close the position and then to go short. So you can reverse a position within a second. It's very, very simple, very liquid. In other words, there's always a buyer out there for you traditionally, not like owning a stock that's got a small liquidity base. So yeah, gold and the international markets certainly are that attraction, Will.
Pete, I look at this and I feel it really looks like it's consolidating for the near term. Stronger price direction may well evolve from here, but it feels like it's consolidating for another breakout.
Yeah, I would think so, Will. As you've said there, it seems to be just, markets, again, the luster goes out of them, pardon the pun, but it does at the point.
Rock stars, luster. We'll be fossicking soon.
Fossicking, yeah. So we're fossicking for a breakout, but I think you're right. I feel as though that gold will probably edge higher over the next matter of months leading into Christmas. You can't put a date on what price it's going to be, but that chart really demonstrates the volatility of really what trading's all about. And again, it offers so many financial opportunities.
Well, Pete, there's the show, there's the wrap. There's plenty happening this week. We're standing by watching for the data that's going to flow through. Certainly that comes out of non-farm payrolls. We've had the forecast. We've got the forward word. So unless we've overstepped, mate, and we've covered off anything outside the boundaries, I think we've set the week up for the traders.
Absolutely, Will, and keep their eyes. It's a landslide as far as data. We've got Kiwi, we've got Aussie, we've got numbers coming out of China, where, as you mentioned, the Eurozone, UK, and of course, capping that off Friday with the non-farm payroll. So have a great week to all our viewers. All the very best. And from lockdown Sydney, take care.
Lock it down. Talk to you later. Thank you, Pete. Speak soon.
Cheers, Will.